Good morning, everybody. Audio check, audio check. Sure can. Audio check will be with you shortly. Ladies and gentlemen, Pedro and I are getting things started behind the scenes. We'll be with you in just a moment. Over on the screen next to me, Elon tweeted he's blasting the big beautiful bill as a giant pork bill. Oof.
He's right.
He's right. Ladies and gentlemen, welcome to another show. It's June 3rd, 2025. Good morning, good evening, good afternoon, wherever it is in the world you're coming to us from. Welcome to DYOR Live here on the DYOR Media Network. We're so glad to be hosting another great episode. My name is Tom, otherwise known as Striking. The man over here is Pedro Garcia, the crypto chart analyst, and we've got a good day for you today. I think I did my stuff out of order. It's June 1st, 2025. BTC showing some weakness, probably going to move into the areas that Pedro's been calling for the past couple of days. Crude oil's been up from June 1st. Good question. Will Canada's promised infrastructure building keep the crude oil markets down, or will OPEC pump, baby, pump, keep the markets down and drive the prices down for that as well? Maybe Pedro will give some insight into that later. Also, ladies and gentlemen, Pedro, I'm just going to ask you this question. I'll ask you this question, Pedro. What is the economic term that describes prices going up, but activity in the economy going down?
Divergence.
Stagflation. We haven't seen stagflation since the I guess since the 80s when we saw or early 80s, something like that. It's been a long time since we may have seen very brief periods of it, but the economic indicators are kind of looking for possibly a long version of stagflation, because companies are just not doing as much investing based on the whole tariff mess. It's coming out in the numbers that are starting to be reported. And so it should be interesting. I know a lot of this stuff is Technical Tuesday type stuff, but after doing some research, these things came up on my feed, so I thought they would be interesting. Pedro, what's happening today, Pedro?
None much. How you doing, man?
Doing well.
Looking at cars, and this morning I was at the dealership. It was fun. met a cool guy, cool dude.
Well, if we all recall, Pedro turned his car into a heap of junk recently. Not entirely Pedro's fault. He was avoiding someone else. He didn't want to smash someone else that was running a light or stop sign or whatever it was. And unfortunately, when he weaved, the pole that he was heading at did not weave. So it's time for Pedro to get some new wheels. And hopefully the great crypto markets will be good to him, and he'll be able to get his new fat Lambo, or otherwise known as economy car, that gets good mileage. Not a Lambo.
Yeah, I would. If I could really 100% afford a Lambo, I wouldn't. I just think they're the most.
I wouldn't either. My cousin's a Lamborghini dealer, and the people that come and buy it, you're just like, dude, why?
Yeah. If I was to get one, I think it would be. I mean, if I was to get a luxury car, it might be Bentley. And the only reason why I say that is because they ride so smooth.
Oh yeah.
Dude, it's like fine chocolate. It's like like I've had friends of mine who say, and there's a few other, very luxurious, nice cars that you can, they just are meant. Like the leather in it is just pure. The sound system, the car itself, it just is so put together that it's like, it's the reason why this thing costs $300,000.
Man, I used to drive a. Let me rephrase that. For work. It wasn't my car, but I periodically had the opportunity for work to drive the 1990 versions of the Bentley Continental T. They had a special version called the California Package, which the California dealers got together and built. Had Bentley's custom division Mulliner build special, even more souped up engine version. They had this giant 8-cylinder engine with a pushrod motors. It was the old school engine. All it did was scream awesomeness. And every once in a while I had the opportunity to drive it around Beverly Hills and Santa Monica and stuff, moving it from places that they were trade shows, displays, as the young marketing geek. And I'd be riding that thing, especially convertible ones. That's right when those automatic tops started coming out. I'd be like,
yeah, so it was all.
Yeah, man. People be like, man, who's that? Why is that 20-year-old driving that Bentley? It must be a trust fund kid. I'm like, nope, work for a car dealer.
And it feels good because it just those. I've driven one and a couple, and yeah, if you're gonna go, if you're gonna put in $250,000, because they're cramped. The Lamborghinis are cramped.
You're not the body type for a Lamborghini. Let me tell you that, my friend.
Yeah, I'm a big boy.
Well, ladies and gentlemen, I got a good show for you today. We're broadcasting on a couple of different places today. We added LinkedIn back into the mix, so welcome everyone watching us on LinkedIn. Our Rumble crowd is already tuning up for us. Thank you very much. I really appreciate it. Our YouTube crowd, YouTube algorithm, not been good to us in the lives. They've been pretty good to us in the replays. Oddly enough, Pedro, our YouTube channel is getting thousands and thousands of hits on videos, not on the lives. So I've been trying to put more videos out. Like I summarized our Technical Tuesday last night. It's getting a few hits. So there's been some changes in YouTube. But what's the most important thing is all you guys at Rumble, press that follow button. We're up over 140 followers now, heading on our way to 200. We'd like to have 200 here soon. And we would want to get this up to, we want to have 33 people at once on Rumble watching us. You know why, Pedro? First of all, because it's a goal. You know, it's 100% more than we've got now, or 200% more. But Rumble will allow us to read their ads. And you know, the ads when you're just in the middle of so the market today is pretty good. By the way, have you used Tide detergent, Pedro? You know, and we can earn a little cash monies for that. And you get a little better distribution in the channel when all that happens. But anyway, welcome to everyone watching us wherever you are, including on the replays here. I know our information that when we go over the markets times out pretty quickly. It's called getting stale. So our videos don't last more than a day or two, but we do talk a lot of good stuff here in between pricing and all that type of stuff that is more greenfield stuff and lasts a long time. So if you like us, share our link in your trading groups. Send it off to your friends like, bro, check these dudes out. Or, hey, chuffity chuff, I just lost my whole British thing there. It's like, oh well, I had a whole thing there. It's about well, Charles, I'm watching these two gentlemen. They're chuffed as nuts over here talking about the markets. I think you'll make a fortune.
That is like the most craziest, bro. Chuffed as nuts. And that's a real saying.
It's a real saying. Chuffed as nuts.
Chuffed as nuts. You know what? I like these pretty backgrounds that I have here. I like doing it right. But I was looking at yours, man. It does. Do you think this looks better or the other one looks better? Or if I was to have your background?
Hold on a sec. My background, it's been the same background. Wow, where'd it go? It was just a little bit more purple than that. It's totally a stock photo type thing. And I think if you blow it up, it says Microsoft on it or something like that.
That's interesting.
Anyway, Baby Draco, thanks for joining and thanks for giving me the audio check. Really appreciate it. Remember, ladies and gentlemen, we're a live show here. We are a live show. So that means you can ask questions. Ask questions about the market. What are you trading today? We're not just covering crypto here, covering all the markets as I expand my trading knowledge here. Pedro, you asked me if I was in a trade this morning. I'm in one now, but I'm in what's called a mitigation trade in demo mode. And the other day I got in the market in what we would call a blind trade and it was essentially at the top of the market. And in the demo account, took a healthy position, and my goal was to mitigate that trade back into profits. And I would say I'm about halfway there. Made a few mistakes, made it worse. I thought I was looking at divergence and the market was going to turn around. I was looking at bearish divergence and the market tanked further. But anyway, it's good practice. It's good mental practice for me to try and do these things. And in order to, my goal is to never get into losing trade, but we know that's impossible. And so practicing getting out of a losing trade by mitigating it and by basically taking a calculated bet that the market's going to go with you.
What happens if it keeps going down, though?
Then you're screwed. Well, ultimately you do have a stop in there somewhere where you're like, all right, no more pain. But it's a trade when you start with 0.05 or 0.5% as your margin of your account, and then you mitigate it up to 1% or 1.5%. You're still not looking at a lot of money. It's not like I got 200 grand on the line or something. I can't.
Yeah, it's still money.
I'm like, Jesus, I got $350 in this. Oh my God.
Well, the reason why I say that is because of this right here. Look, when you get in and out of a trade, right, and you don't dollar cost average down into it, the reason why this is important is that
Your mic is not in a good spot, Pedro.
what about now? Is that better?
Just as long as it's not in front of you, because then you, all I hear is the P's.
So what about now? Is that better?
Yeah, it's okay. It's the best place is where you used to wear it on the side, but you did.
Yeah. Is
That's
that
good.
better? Okay, perfect. Yeah, because it's in the same spot. Okay, so you could have shorted here and made money down here.
Yep.
But you were dollar cost averaging as it was coming down. You could have gone long here and rode it up to there and made money. But you didn't. I mean, you did, but you really didn't because you're just mitigating it. This is why I'm a huge proponent in take the loss. Like here, right? Like this trade here. I said, all right, expect this to go up, right? And actually it was right here. Excuse me. It was the Monday. It was this trade here. We thought it was going to go up. It couldn't get above the 8, right? And so I said, you want to put our stop right here around that 104.393 area. And then if we get stopped out, but we already made money as it moved up, right?
Right.
I think we would have made, we risked originally $100 and then we took it to $50. But it made $200 all the way up here. You would have taken off 60 to 70% of that, which you would have made $100. And then it would have come out and stopped you at $50, $40, and you would have been cool, right? And then once it started showing strength again, right, like right in this area, you start to see it push up. You wait for a pullback, right? You could have been long here. You could have been going back and forth, but because you're still mitigating that one, you're hurting yourself. I'm a huge proponent. You could have gone long here, could have gone long there. It was a similar situation like we saw right here for the open. You can see that's the same thing. Like these little setups they do it every single day. That's the open. This is the open right here. Boom. Again, this is the 8 o'clock or the 11 o'clock open right here, right? Boom. They're looking for stops. You get stopped out. Getting stopped out is literally a part of this.
I know.
Like it's okay. And so then you get out and it starts to show long, and then so you get stopped out here. But the way I show you guys, by keeping along with the trend, you can actually you should always have a higher win ratio than your lose ratio, because you're always going with the trend. That's why we look at the monthly, the weekly, the daily, and then normally that 4-hour, right? Because it gives us a good understanding of which direction the market really wants to go. So that enables you. I would almost encourage you, get out of that mitigation trade so you can, you can do whatever you want.
Oh, I'm just doing it in a demo account on one thing. I'm still watching the trades on other things for live trades.
That doesn't matter though. What I'm trying to say is it trains your brain. It's still a dopamine hit. It's just like
I don't think it's a dopamine hit for me. I think it's a dreary misery that I'm practicing getting out of a losing trade.
It doesn't matter. It doesn't matter. It still gives you a dopamine hit. It's the rush. And every time you look at it, whether it's training your brain for pain is what it's training it. So it then restructures your brain. So when you look at a trade, because here's the thing, it's like an abusive relationship. People who have been in abusive relationships go back to abusive relationships because their brain becomes accustomed to that drama, right? It's a chemical situation. This is a similar situation, is that it's creating that same chemical imbalance. I'd rather you be in good trades and start to have your brain looking for good type of trades versus every time you look at a negative trade and then you're like, and then your brain starts to say, okay, well, we're showing attention to this. And then your prefrontal cortex starts to map that in your brain. And so that's why, like they say, look, negative things happen.
I agree with you on that, Pedro. You've told me this a lot, but I disagree with you on how I'm feeling. I am feeling the positive dopamine hit from this because I set a plan out to do something and I'm following it and it's working. Whether it's green or red, doesn't matter. I said, all right, and I let the trade just go to shit. I just let it go down, 150, 200%. And then said, all right, let's work this back. And it's not just DCAing, and I saw the market switch a little bit, bought and sold in the middle of that trade a little bit, and helped out. And it's just practice for me to get my mind into recognizing patterns and all that, and what's going on with the market, because I'm still crappy at it. Just to be honest, I'm still crappy at it. I'm very poor at divergences still. Some of the people say this is a divergence here and that's a divergence here, and you look at the charts and it's like, well, it could be either. And so there's other things I don't know how to take into account. So it's all practice, and I don't mind that. And my mind treats it as something good, and I'm not getting that saying it's a losing trade type thing. I'm getting ooh, look at that, it was down $350 and now it's only down $3. And I see that as success.
Oh, then get out. If it's just $3, man, because and then if it starts to go long or short, you can then take advantage of that. You follow me?
Yes, I am getting out.
Yeah, if you're just down $3, then whereas it was down 350, right? So you can play that.
Baby Draco says, missed the car talk. Yeah, I get car talk every now and then here.
Oh yeah. Like what we're talking about here, this is car talk?
No, when we were talking about Bentleys and...
Oh yeah.
You can always scroll back there. Although I might not have... Oh yeah. Baby Draco caught up to the live. Oh, you must have skipped by the car talk.
What's interesting is, so in trading, I can be a bit dogmatic because of what I do, right? Like it can be annoying to some people. But the thing is I'm all about like doing the right. Like if you practice right, then you work it right. Then what happens is when you get down to it, you will be based off of a rule-based system. Mm-hmm. And if you can get a winning edge on a rule-based system, and you just learn how to stick to those rules, then you're good. I personally think I've seen people do the mitigation trade, and you're right, it always does pull back a lot of times. But there's that one time that it doesn't, and
right?
It can ruin your account. It can, imagine if you get in at the start of the next bear market, and
just keeps going down.
It just keeps going down, and you're like, as soon as it's going to come back up. And imagine if these are days, okay? Not 2-hour candles, but imagine you're like, okay, boom, I'm going to go long here because I'm looking for it to go down, right? Or looking for it to go up. See a big buyer wick here. We're above moving averages. We just came and tapped this, this zone here, and we probably should get through it. All right. Well, you go long, boom, your sum of profit, and then it goes against you, and you're like, okay, I'll come back. Boom, boom. This and that can happen so that's why I always hit so hard and almost ad nauseum. If you're in a trade and you're going against your rules, get out. And it can always keep going down.
Right.
That is real. Sorry. Am I berating a...
Nope, but I totally get your point. And I do follow rules. I don't just... Back in the day, I was like, ooh, the market's looking good, I better buy. And then beep, down. Thanks for the liquidity, buy. And now I do much better because I use a rule-based system for the if this then that then this then that. But like I said, you hear me do things. You hear me say these things periodically. I made a rookie mistake, and in the past, the rookie mistake would kill me. And so I was just trying some things to not rationalizing, trying to justify my actions. I'm just saying I need practice in all sorts of things, and in doing that. And that was a challenge to me and it wasn't just DCAing. Anyone can just keep adding until the market comes around. Like here, let me me point to the, like, say I got in here, look at the studio feed. I got in here at the top there, and it pounded down to here. And then I said, all right, I know it's not just going to zoom right back up. Well, I don't know that, but I assume it's not. So I add a little bit here. It gets up here. It starts to look like it's going to turn back around. I sell that little bit, buy that little bit again here, come up here. This is what I was doing. Sold a little bit and then bought some here. Then it came back up here or here. And that's about where my price came down from all the way here to here. And it got out with actually by the time I clicked off of it, it was minus $12. So.
Okay.
But as I can say, it's practice. But anyway, enough about me. More importantly, what's Bitcoin doing, Pedro? It looks like it's wanting to come back down in those ranges that you've been talking about all week.
Yeah, so we're seeing it here. Let's look at we're playing off of the 189 moving average here, which is basically an 8. This is an 8-hour 8 is what we'd be looking at. We can't get the 8-hour unless we're looking over here on this one.
What chart do you have up there?
Here it is. So this is the Bitcoin one for the aggregate trade. So come in 1 second, 8-hour. So right now you can see on the 8-hour, here's our 8-period moving average. And right now we are in between the 8 and 20 period moving average. Excuse me.
Highlight those for the people on the screen because it's just so they know what you're looking at.
Okay, I wonder if I can change the color here on this one to white. I'll just highlight it here. So right here, let me remove this here real quick. Okay, so do you see the 8-period moving average right here? That's the purple line right here. And then we have the 20 and the 89. So on the 8-hour, we're kind of ping-ponging off of this back and forth.
8 is the one up, the top one, the purple one. 20 period is this orange one. And 89 period is this one. And Pedro, why 89 and not 90?
Because 89, from a institutional standpoint, they just have found that when you see the 89 and 8 cross,
yeah,
or every time it kind of bounces, that 89 is just a stronger form versus the, you could use a 90 and play off of it, but they did a huge study. So it was one of the ones that between the 89 and 8 crossover, like if the 8 here, if we see price go down and we see the 80 and the 89 cross and the 8 goes below the 89, that typically is a sign normally that, okay, that you're going to see some bearish sentiment kind of kick in. And so based on the time frame, like if you go to a 5-minute.
All right, well, before you get into the weeds on that, the point was it wasn't just like Pedro's came up with it. You're saying that they have studied it and that crossed the 89, crossing the which period, the 21?
The 8-period movement.
Oh, and the 8 and the 89 works out a little better than the 8 and the 90.
Yeah, just
okay.
That was just one of the things, one of the numbers that just first retest of the 89, typically it holds. Let's say sells off through it, like right here. So this is, you see here, it was like it pushed through. You see how it held right here on the 89. This is the 100. You can see here again, it held. The 89 held on the 100, or the 89 held on this price. Then you can see here, now that it is acting as resistance here, sold off. We saw price come up, and typically if price sells off and we see something kind of like, let's see if we can find it. Here you go. See how you have just a bunch of moving averages here? The 89 typically is the one that it likes to go to. And it's on the hour, the 89, on the 5 minute. On the 5 minute, the 89 moving average is the 8-hour moving average on the hour most of the time. And so a lot of times that 1 hour time change, that's why you always see me look at it, is a indicator for me to sit there and say, all right, people are getting in or out of their trades. You can sit there and see drop, boom, here's your 8. You see the price come up close to it. This is
You're just a little behind the Bitcoin graphic. There you go.
So you can see here, it drops, 1, 2, 3, pull back, and then you can see it kind of went back down. So you can typically take place off of that 89 or the 8 on the 1 hour, but on the 5 minute, the 89 acts as a nice little. You can see if I'm sitting there and I'm going, okay, we're coming up right here. We haven't really touched this 89 right here. Okay. Well, most likely when we touch it that first time, and it starts to show weakness, I know I can get a play off of this. And you can see, boom, first time it touched, I get hit. I was supposed to be support. It did not act as support. It came down, came back up, tested right here. You can see we went down for the rest of that day, or from 3 o'clock or 2 o'clock all the way to 6:40. So it's a little strategy that you can use, and it's based off of the 89 on the 5 minute, and it correlates with the 8 on the hour. But there are other things like that, like your EMA, or also your VWAP or divergence that correlate between price going up and then looking at, let's say, the RSI, seeing divergence, it's starting to turn down while we're seeing price go up. That divergence typically communicates the same type of thing. So you can line these things up and say, oh wait, we're seeing divergence with price and the VWAP or whatever system you use as a trending system or a reversal system. And then from there, you then can see the other end where you see people really kick in and go, all right, if you're watching the price point here and you're seeing all of a sudden sellers starting to come in, you can see it's primarily red, you don't see a lot of green, then I would expect to sit there and see it continue down, right? Now, obviously, we sold off of this, blew through, hit your 50, and then we started kind of playing around. Now we're selling off again. You can see here on the hour, that 89 here on the hour and 100, right?
Yep.
If we go to your 8-hour, these are higher time frame SMAs playing with each other. So you have your 89 sitting right here on the 8-hour. So you see how they all kind of play with they all interact with each other. This is why, like, I'm frustrated with TradingView for changing up the crypto charts within their system, and they just messed them all up again. This was months ago. I mean, we saw this once Trump got into office. TradingView purposely switched up their charts. And
I haven't heard anyone talk about that.
Because people don't look at it. People think they think it's a non-issue, but they don't realize it is probably one of the biggest things in the market, but most people are ignorant to it. Like, do you ever wonder why I'm able to call the market so well?
Every day on the show, I wonder that, but then I listen to you tell me why.
Because one of the biggest things is the time frame syncing up, and that's why you see me. That's why I look at the hour, right? Like, because now you can't mess with the hour. The hour is an hour, 60 minutes, unless they decided to go 61 minute, or they do it at the top of the hour or the bottom of the hour. But still, it just depends on how they calculate. They haven't messed that up yet. If they do mess that up and create the new, and they can. There are organizations that do that, where they mess. So they start the hour, not at like the top of the hour, but after like the 5 minute. So like, let's say right now it's 9, or it's 1 o'clock. So it's
you using the whole fist, Doc?
oh, what's up, Chuck?
Sorry to interrupt you, Pedro, but a shout out to Chuck Jansen. Thanks for joining us. Really appreciate it. Thanks for the whole Fire Chicken crowd for joining us. Thanks for all the projects you're involved in, Chuck, for joining us. Really appreciate it.
So I have certain time frames that I like to link up together. And so the reason why I use my hour is like, let's say I want to capture the American Open, okay? And that's the 9 o'clock, right? So I can sit there and line up the actual, so here's your 9 o'clock open right here, okay? Boom. So you can sit there.
9 o'clock open for what?
For the S&P 500. Or
S&P.
It's Bitcoin opening up on the CME.
I thought that opened up at 9:30.
Excuse me, 9:30, but I'm using 9 o'clock because a lot of times they will retrace. So like if you go to 30 minute, right, here it's the open up, but here's 9:30.
Right.
So a lot of times I'll use that hour to correlate it, and I will sit there and I'll play this. So now it can give me a correct view of what's actually happening. How many, for me, I'm all about confluence, right? I tell you guys, have multiple charts that you use your trading strategy on that you can go through and say if your 5 minute lines with their 30 minute, hour, 2 hour, for whatever technicals you use, that brings more confluence. And typically whatever trading strategy you use, and they all kind of come together at a certain period in time, typically opens or news events. Okay, these are then communications of where you can utilize all of your indicators. So you can play these with your 1 hour chart, your 3 hour chart. I've seen people use 6 hour charts, 8 hour. It doesn't matter. But if you use them all together and say, hey, on my 5 minute, I'm trending here. On my 15 minute, I'm starting to trend here. Below me, I have resistance, right? And I see there's a lot of moving averages. You're above the VWAP, right? And all of a sudden, you're like, oh shoot, I'm gonna push this up. This should go up. And if I have that on multiple charts, let's say you only use 5 charts, you use the daily, you use the 4 hour, you use the hour, 30 minute, 15 and 5. Okay. Sometimes when you correlate all of those, or your 5 and 10 minute, and then you use your 20, your 60, whatever ones you use, try to correlate all of those together. And so that you're not just looking at like that 5 minute chart where you get myopic. If you can sit there and go, you know what? I need to focus here and see that on my 5 minutes moving as well as my hour and my 4 hour. Shoot, we should see a bigger move in regards to this. So if you're seeing consolidation, that's why I said with Bitcoin right here, right? I want to see it go up right here. And this was on Monday, right? Because it correlated my higher time frames, and I saw that we were setting up for it to go all the way up at least to that 105 area, 106 area on Monday. This was it right here. I thought we were gonna go. This was it right here. No, where's it at? Monday. Yeah, right here. This is. I thought we were going to push up. We didn't. We came back, pulled back, but it still played well. You saw it pushed up. So that's how I'm able to look, because I can sit there and say, all right, if my smaller time frames are showing me it's a good time to get in, right? And then my higher time frames are showing me, hey, we've got clear runway and there's no resistance. There's no impedance to the market. For me, from going from here to here, you may get stopped out because they're doing liquidity runs, but if it's showing again, hey, there's buyers coming in, that's when you can be confident enough to sit there and say, I'm going to take this trade again because we should see it continue up, and just give yourself a little bit of wiggle room. So it's one of those things that that, like, these are some of the stuff that I always talk to you guys about, right? Like here.
Welcome, Jason Spurgis, to the show. Thank you for, obviously, you're the better half of the Spurgis family because you are here today. Thanks so much. Haven't seen you in a while. Thanks for joining us. Make sure you take a link to the show and share it with all your buddies and drive that viewership up for us.
It does help us immensely. Literally, if you can go to the Rumble account and share that onto one of your profiles and then click it, that helps us out. When you guys did that, and those were some of the biggest days we actually had on Rumble.
Really look at that. I guess I was saying Jason was the better half. Now Shireen has joined the house, so neither of them can claim to be the better half because both of them are on our show.
They're both a complete package.
Fire Chicken says, never fear, we are here on Rumble.
Forgive me for my voice, guys, today. It is really, there's a lot of pollen where I'm at right now. And I woke up this morning and I'm just like, wow, what is up? So I have this little tickle here.
All right, Pedro, we've been talking a lot about the moving averages and how they interact and differences between the two. What's going on? The week, we're at the midpoint in the week. And you've been talking about Bitcoin naturally coming down into an area of liquidity that's lower than where we are now. Does it still look like it's doing that?
Say that one more time.
All week you've been talking, in the past, not all week, but for more than a week, coming down into the the high 90s to start, and possibly even a little bit lower than that. Is the week shaping up along those lines, or is the Bitcoin market taking a different tact from what you were talking about earlier?
No, I think we're still going to come down. The reason why is yesterday we closed as a red candle, bouncing off of the 8 and 20 cross here. I'm expecting it to continue down. You can see we had more volume as well during the market as we were selling off yesterday. So when we look at the smaller time frames, you can sit there and say, you know what, as we're coming down, they're trying to push it up. I'm more apt to say that we're going to continue down, at least pulling up. We're not really seeing a lot of volume come in for the last few days, so that's why I think they'll push it down to get it to go down. My trending that I'm looking to kind of gauge is really that 50 period. You can see the 50 period moving average on my 4 hour really starting to hold. So we probably will come up, hit this area. This area right here will act as a liquidity pool, because here's your wall. Here is where the stops are sitting. So along this line here, we should see the market probably come up to here and then push it down.
I know a lot of you viewers are like, down? We don't want to hear about down. We want price to go up all the time. But remember Pedro's, not just Pedro's, but now Tom's bit of advice too, because it's been drilled into my head so much. Things can't just go up forever, ladies and gentlemen, and we all know that. They've got to come down. They've got to grab the liquidity. They've got to come down in and buy lower so that they can sell higher. And they're not going to do that unless they have a nice good price to buy it at. And looks like Pedro's got. Pedro, you got your window open today and letting that pollen right in the window?
No, but I have been out and about, and sometimes it's part of it. This is spring. Did you know that pollen actually helps men's, especially pine pollen? Really helps men's testosterone, helps balance your body. And so there are people who literally go out into the woods, shake a pine all over them with all the pollen, bro, and then they'll go take a shot, and then they'll go take a quick little swim in the lake, to get the rest of it all. But they'll do that because it totally fortifies and strengthens a male's body.
You know, you hear the phrase in crypto and trading a lot, go outside and touch the grass to get away from the computer and experience the real world. I never would think someone would say, oh, just go outside and shake a pine tree. What'd you do? I took my shoes off, I got in the grass, put my toes in, it felt good, felt one with the earth again before I went back inside and spent 72 hours in a row in front of the computer. Instead, I took all my clothes off and ran around this pine tree naked, woo, shaking it, and then took a swim in the lake.
Yeah. I can see that sounding crazy, but it's kind of true. It really is.
We got a Rumble rant there, Pedro. And Fire Chicken, thank you very much for sending your... Wow, that just doesn't stop, does it? Sending your $5 through the great Rumble system to show the Rumble algorithm that there is something going on here on this channel. Nothing better than having you take your money and put it in my pocket and put it in Pedro's pocket right there. Boop! Thank you very much. That's easier than trading. Just have it give it to us. Anyway, thank you very much. As we always say, everything we use goes to help better the channel. Thank you very much to Mr. Fire Chicken over there on Rumble. All you other Rumblers, take notice. You're behind the curve.
That's funny.
Draco says, smoke a J while you're at it, too.
You know, one of the things I think is really interesting.
Ooh, sorry.
Is us looking at what we're seeing here, with it kind of consolidating here. I mean, I'm only apt to think that people are going to go through and buy up more crypto with the new law that was passed. Well, wasn't fully passed. Still got to go to the Senate, right? But the big beautiful bill.
Yeah, which has turned out to be a big beautiful turd, for my opinion.
There's a lot of money that's going to go to a lot of people that are struggling, right?
Did you see the AI thing that was slipped in there that suddenly no congressman saw because they don't actually read the bills? It bans states from regulating AI at all. Like an individual state, you can't regulate AI whatsoever or place any rules on it, no matter what. Like if the state wants to pass a law saying you can't use AI to mine your DMV data or something like that, or I'm using data as another thing. That probably other laws for that, but and like a lot of congressmen tweeted, "Hey, I didn't see this on page 6,492," because they don't read it, and they're hoping to get that pulled out in the conference committee after the Senate passes it. I found that our bills are too big. These large omnibus bills we have, it's just, being here in Canada, I read the bills that come out of the Canadian Parliament, and they're single topic, and they're about 3 pages. And they're not complicated. And anything that comes out of the U.S. Congress is 75,000 pages. It adds 1 million pages after rulings and after interpretations to the United States Code. It's just ridiculous. Anyway, getting off topic.
No, but I think what's interesting is just this idea of this market move. If I think there's going to be extra money in it for a lot of regular people who work overtime, who are going to have that money, and I think the idea is just going to be more money going into people's pockets, which I think will jumpstart the economy.
Temporarily, yeah. I think so. You're right. But with it adding to the deficit and adding to the national debt, it's just not good. And the problem is not that we need to get into a talk about politics when we're trying to cover the markets. We'll
go over gold here in a second.
Is that the Republicans don't have a filibuster-proof majority in the Senate, and so they had to give away everything. They had to promise every Because there's like 5 senators that can hold this thing. Well, there's 47 that can hold it up. And they have to give every one of them something. And then their congressmen from their states go to those senators and say, you also got to get us this stuff from my local district too. And so all of a sudden there's $2 trillion in pork in there. Just bang like that. After we spent all this Doge effort to get the pork out, nope, right back. And that's how it works unless you hold these people accountable. This drives me crazy. Mikester on Rumble says the pine tree comment gave new meaning to the phrase tree hugger.
Tree hugger, that's awesome.
I'm sure you're imagining a naked Striking running around right now, hugging the pine tree, hoping to get some pollen out of it. Wait, let me rephrase it. A naked Pedro just running around, inhaling the pollen.
That's funny.
Algorithm, pew! Now do one for a rock liquor.
That's funny.
Oh, you guys.
There's so much stuff going on now within science, dude, that like it's kind of crazy. And they're using, AI with a lot of this stuff. So this is the worst AI will ever be.
I know. That's amazing. It's a baby. It's like a 1-year-old baby right now.
Yeah.
And when it's 5 years old, it'll be Skynet. So just like we talked about yesterday.
Well, it's interesting. We're watching, I wonder what they're going to do, in the markets, right? Because we're definitely seeing much more algorithmic trading, right? You see, this is algorithmic trading, right? Look at this right here. This is algorithmic. It's right here. They're put in a position where they explode it. Boom. They come here. They're going to go to this liquidity pool right here. And it's so interesting to sit there and watch it.
What's that number you had for where the liquidity pool is generally? My book map it earlier when I had it up. I can't have it up now because of the system resources. Oh, it was gold. Sorry.
For example, for gold, you can see here. I'm looking at that 34 or 34.80, or excuse me, 34.48 there, and you can see here that area. If we come and we hit it, I'd expect it to kind of push back again. Make sure that you see it start to trend down to pull back to the daily 8 on gold. But this is one of those ones that, it is algorithmically traded in a big fashion. There are a lot of people, so you can sit there and you can see right now they're putting in positions potentially to push it back up for gold. For crude oil, it's really even more interesting. Wow, I couldn't even say that correctly. Is that we came up to the liquidity area here. It was trying to, but again, it's sold off today. So I'm definitely looking more as a sell-off area. You can see that for crude oil. And I know, like you said, there's a lot of fundamentals kind of going into this, but you can see here that people are definitely selling off their positions here and looking to expect it to go down lower. And so came so close. What is that? It was literally 20, or what is it, 4? So it was 23 points away, or 23 cents away here. So basically about $250, $220 or $230 for one contract here. And so you could, but either way, it was definitely giving you vibes of going down. You can see here we got the crossover and we started.
You know what, Pedro? I didn't notice that you switched to crude here as I was listening to you. Go ahead and finish what you're saying. I have a couple questions to ask about crude oil.
Yeah, so we're seeing us here, we're just basically, you can see here, we came up trying to push. You started seeing an increase in volume, and then you see the huge sell-off, man, from the open or at 11 o'clock. And obviously, we have inventory today, or inventory reports. But again, they're already communicating that they wanted to see a sell-off here. So really, really interesting to see how they're going to handle this. So what was your question?
So it's more of a longer-term question. The Canadians here have totally freaked out about Trump. They elected a new government. the new government completely reversed its policy. It's the same party. Reversed its policies. The old government under Justin Trudeau said, we're not developing any oil and gas, LNG, forget it. No infrastructure at all in that. And the jobs and oil companies fled Canada. They're like, okay, well, you're not allowing us to do anything, we're going to the States. And a lot of them moved to Texas, relocated, bought companies in the U.S., yada, yada, yada. One of Alberta's biggest exports is bitumen. Bitumen is a slurry of essentially oil and sand. And it's really heavy and gooey, and they don't have a pipeline for it to get it out of Alberta. All of a sudden, they put it on trains, and they have to have 1,000 million trains, and they crash and explode and all this type of stuff and burn houses to the ground. They want a pipe. They're going to get a pipeline for that, supposedly. They're going to get all these other things. They're going to expand, potentially, the Alberta and Canadian gas, LNG, and oil, and all this stuff by, they're talking about 100% raising being able to raise their exports. And not just to the U.S., to their coasts so they can get them out of here. Does news like that of infrastructure investments affect the crude oil market from a trader's point of view, or is that just like such long-term stuff, nobody cares?
No, I think it very much does. The fact is that with all of that means there's going to be more supply in the market. America isn't stopping production. We're keeping it up. We are actually talking with, Germany and a few of these other organizations or other countries are saying, yeah, we'll buy oil from you over Russia.
Right.
So the fact is that now that you have Canada kicking in, maybe some of those European countries will sit there and say, now that we have options in the West, what does that do? Right? More supply means price goes down. So absolutely, I would, at least from a fundamental standpoint, the way I look at it from supply and demand, I would assume, and that is a fundamental issue. And you guys got a ton of oil down there. Or up there. You got, it's,
yeah.
You got plush.
And they can't even actually figure out how much, because a lot of it is under the tundra, and the tundra changes the way the radar works or whatever. All they know is that they can't figure out exactly how much, and every time they get a new tester device or thing or whatever, there's more. But so I was trying to relate that to the trader's point of view. When news comes out about an increase in infrastructure, do people that are, I don't mean people that are scalping the market. That's that they might try to see a news article and be like, oh, let's make a point or a tick or whatever. I'm talking about people that are like, in it for the week. I think I see the week or the month being an up or down trend or something like that. I was trying, and the reason I asked that isn't just because I was sitting there wondering it. I'm trying to figure out if some of the Canadian politicians and other people are playing the market with their announcements, just like Nancy Pelosi does, in the House of Representatives and that type of stuff. I'm trying to get an idea, because some of these announcements about things seem too well timed. But the cynical part of me is saying, something's amiss here, and people are making money on these announcements.
Absolutely, man. Nancy and all of those people, man. We know one of the primary reasons why Nancy Pelosi is supporting Taiwan is because she's got a ton of stocks in many of those countries. And so she's got to secure her bag, and she's powerful enough to sit there and say, hey, America, you need to watch Taiwan's back because of X, Y, Z. But the reality is we also see how much she has in a lot of these other countries. Now, I also think that she is pro-freedom. She may agree with a lot of policies China has, but I don't think she agrees with how they accomplish it and a draconian hand. So I do think that, she isn't a traitor, but she would like to see America more of a socialist, if not communist, bent. And so, of course, she is going to fight for Taiwan because her bag is there, but she's still going to push her agenda. So this is where you see that conflict.
Her agenda is get rich or die trying, and she's getting rich, and she's theoretically should be dying about now, but she's not.
Oh, she is, bro. She just...
She got new plastic surgery. She looks another 10 seconds younger.
Dude,
I shouldn't be so mean.
No, I think honestly, she's a beautiful woman. She tries her best and she tries to look good for her husband. I, respect her. But I just don't like what's the word I want to use? I just, the gameplay, the politics that actually correlate with that. Like, look, just help, just get America on point. Like, let's fix America.
Well, that deserves the. Oh, you probably didn't. Let's try that again. That deserves the.
I mean, this isn't going to go away. I'm obviously going to pull up the debt clock here. But we're literally $36,937,000,000,000 away. We are literally almost, what is it? 670, 64. We're $64 billion away from
37 trillion.
37 trillion, man.
Crazy.
That is.
It's crazy. I mean, only a short time ago, Pedro, you and I were talking about this, and that thing's at 34 trillion.
Yeah. Yeah, every 90 days, this thing increases at $1 trillion. $1 trillion. Every 90 to 100 days. That's just scary.
For all of you guys watching on, sorry to interrupt you, Pedro. For all of you guys watching on Rumble, a lot of our viewers on Rumble are obviously one political persuasion over another, which Pedro and I seem to support that anyway. But this big, beautiful bill, there's too much pork in it. And my personal opinion is, yes, Elon is right. The poor guy tried so hard. He spent $280 million of his own money helping the president get elected. Then he comes in office, volunteers his own time. Doing so, loses $100 billion because of his efforts. Because of all the left-wing nut jobs setting fire to his cars. And then the government just comes out and says, thank you very much, but tough noogies, we're just going to spend all this money anyway. And we can't keep doing that. We can't keep deflating our dollar. All of you viewers are getting poorer, more poor, whatever, however you want to say it. Your money is devaluing. Your pension plan that you guys rely on is becoming devalued. Because of bills like this. We devaluate our currency, we print more money, and it is worth less. You think, well, my pension is involved in the S&P 500 and all that. Yeah, great. The S&P 500 goes up 7% in a year. Obviously, it's done well recently, but it can't always do 20%. Average is, 3.8% or something, Pedro? Inflation has to do is be higher than your return on your pension fund's investments, and you have lost money. And it's because of bills like this. Because of it. Talk to your congressman and say, enough of this crap. Spend less money.
Yeah, and I mean, I think a lot of the people on Rumble, you guys hold to a lot of that truth that we're talking about. Now, a lot of our guys also on X also feel, because majority of a lot of people in crypto are what do you call it? I don't know how to put them. Because they're majority of them are libertarians, right?
Right.
Just the majority of them. And so this idea of a small government, or a government that's useful, right, is like important to us. And I'm a libertarian, and I feel like there's this point now where it's just like it's getting out of hand. Like, your children, your grandchildren, when your children have children, and over the next 10 to 20 years, they will be, if we keep going along the same trajectory, we are going to see your children fighting with your grandchildren, once they receive money, they will run to the store. Like, it will get to if Elon Musk does not, if our GDP doesn't grow and it keeps going at what the pace it's going, then this debt will overshadow it.
Right.
And it will keep getting worse.
Yeah, this debt is essentially what our GDP is right now. Our GDP is essentially middle 30s trillions or something like that.
It's 30. Our GDP is $30,000. Or excuse me,
30 trillion.
$30 trillion. Our national debt is 36, about to be 37 trillion.
And last year, go ahead. Sorry.
20%. That is 20% over 20% and growing quicker and quicker of what we make. So basically, you bring in $1,000 a day, or excuse me, you bring in $1,000 a month, right? But you literally your bills are $1,200 a month, and so you're bankrupt. You know what I'm saying?
You're technically insolvent. If you went to the bank to say, "Hey, I want to borrow some money," they'd look at your numbers and go, "You're insolvent. You owe more than you have." And obviously, the debt is guaranteed by the Constitution of the United States, so the United States is not insolvent. But guess if the U.S. government defaults on its bonds, guess who has to pay? You and me. Yeah, most people don't understand this. Is that if the United States defaults on its bonds, the people, the citizens of the United States, guarantee that via the Constitution. So we're on the hook for it.
Or because we are indebted to China, you can see here that down here where we're actually indebted to. So U.S. debt held by foreign countries, they literally a little less than 1/3. So $9 trillion of our debt is held by foreign currencies. If they call that in and we can't pay for it, then China would go through, Canada, Japan owns a lot of our debt. They will go through and say, we want ports, we want things, we need assets, pay up. And I would say out of the 52 nations within Africa, right, 50 of them are like 50 of them are indebted to
China.
And in addition to that backside is they're becoming heavy-handed. They're very much saying, give us ports, give us jumping, let us be able to come into give natural resources. We want that gold mine, we want that silver mine, we want the precious metal mine. Cough it up.
You know, you have to give them credit. I mean, they went in with their Belt and Road project and they just took everyone's shorts. You know, they said they took their belt off and their shorts fell down, and then they proceeded to bend them over the couch and take all of their natural resources. And it works very well in Africa because, unfortunately, most of the countries over there have a corrupt just way of life. I won't blame any specific people, but that's party that wins the government gets to exploit the nation, and other countries come in and bribe them and say, yeah, you know, there's a $10 million Swiss bank account. I want you to just look the other way and default on your country's debt, which isn't real money anyway. It's just your country's debt. It's not your own money. You got $10 million in a Swiss bank, and that's how that works with China. And in fact, to be honest, that's how it worked with the United States and Great Britain and Germany and all these countries long ago, until we all passed very strict Foreign Corrupt Practices Acts and actually enforced them. You don't know how many contracts I lost over time to other governments that don't, or companies that were in places that didn't have Foreign Corrupt Practices Act stuff. Anyway, but it's a big problem, and you know, like I say, keep going back to the people that support Mr. Trump. You need to call your congressman and say, enough of this stuff, man. We really, you know, we were all very hopeful that the spending would come down, the pork would come down. You know, we don't need, you know, $20 million, you know, parks that celebrate the life of some random dude, you know, here and there. Maybe when times are flush, we can do that. But times are not flush right now. We owe a lot of money. We need to stop spending. It stops. We literally need to take $1 trillion out of every budget every year for 30 years. No.
Well, here's the thing. I don't even say you do need a debt. I'll put it like this: debt is us having debt allows for just ability to. Our system is created by debt. It's not going away. It's going to stay this way. It's just going to get more complicated with crypto, right? People are thinking we're going to go and become flush. It's not going to happen. A de-dollarization is not going to happen.
Hello, guess who's home?
Is that you're going to have a mindset where nations or nation states are not going to want to keep doing business with us, because it's one of those things where, like, I don't know. The biggest thing, and in all honesty, is if we can get, and we talked about this, I think with Chris, is a huge jump on robotics, as well as a huge jump on AI, where we can actually outproduce China. If we can do this, and many of the other countries, then this number here, our GDP, which is going to, I hope, grow exponentially. I would love to see over the next industry, as we start to see things really progress, this GDP of 30 trillion get up to 40 trillion, 50 trillion, as our national debt slows down. So if we can get this thing to grow faster, and then this will give us money to pay off this money right here, right? Like most people, when you get a better paying job, right, you go up, or you go somewhere, typically you'll take that extra cash and you pay down your debt, right? And then after that, once you pay down that debt, then you take that extra cash and then you start putting it to investments and things like that. That's in essence what we could do, is if we could create and really build and cause our businesses to be able to make more money, then this, our GDP, the production, the manufacturing here in America, as it goes up, this is partly why Trump wants that stuff here in the United States. Also, it is not good to have China creating and making the chips or some of the drone manufacturing our drones, because it hurts us overall. And so it's like super important to understand the nuances here, that what's actually happening. Quick question for you, Tom.
Yes, sir.
What else did you want? So we went over gold, we went over crude oil, and then what was the other one we were going to go over? It was BTC, which we did. What was the other one? Do you remember? Maybe I should look it up.
It really doesn't matter as long as we hit the ones that everyone wants to learn about, and that, of course, is shit, butt, in you, cat, something. You know, cat litter in you.
Yes, it's funny. That's actually really funny. All right, BTC, gold, oil. All right, yeah, those were the ones that we were looking at. Let's go over some of these coins here. So we talked
Pedro, I'm going to do the quick bio break. I'll be right back.
Alrighty. All right, guys. We went and looked over a lot of the stuff yesterday. I want to go over the last little bit here, and then we can go into a lot of these coins here. All right, one being, so we went over Tesla. I think we went over Tesla. No, we didn't. We were about to get to Tesla. So the fact is that we're actually selling to the 20 period. We might come down with Tesla. Again, this might bring the market down for a short period, right? But you can see here, if we come down, I really want to see if we can get in at that 313 to the 307-ish area, or 311 to the 307. If we fall through that, then, man, I am so sorry, guys. Last night I was a little stuffed up too, so there we go. We've got this area right here that we could hit this area right here, but I'm more interested here. Here we go, right here. So you can see I like this area right here as a support. We come back down and test this level, looking something like this. So I like that. We went over Meta, Coke. Yes, let's go over Coke. So like I said, I'm definitely looking for Coke down at these lower levels here. It looks like it's cutting below that 400 period moving average here. So if it closes here, which is, I think it was because of the earnings, Oh no, they did a split of more Coke financials. All right. So it was a 10-1 split. Wow. So I would expect it. This thing to get down to, people are selling off. It could get down to that $91 here. We're gonna play off of this here real quick. Come on. There you are. Let's play off of this monthly zone here. Yeah, this area right there, that 89 to, excuse me, the 82 to the 89. You've got a gap up here on that 89, $90 mark, and we could see a bounce off of that. But, and it's because it's a pretty large gap. I mean, look at it. Boom, it went, I mean, it was 10 points there. So that's a pretty big thing. You can see here. See this? Yeah, we could definitely come back down. So gold, it looks like, not gold, excuse me, Coke would be a good, I'm looking at this going like, this could be a good play, kind of getting in at that lower level, and then right in a back up. These guys do dividends. They're a decent dividend provider. So you can see there, and picking it up at that lower level would be a pretty good deal. And if this thing really starts to get hit hard, and also I think one of the reasons why is because of what RFK is doing with the Food Administration, everything he's trying to push through. We could see this even, I mean, they put even harder restrictions on this, saying, hey, you can't use high fructose corn syrup anymore. You can't use high fructose corn syrup. You can't use or any type of derivative of it. You've got to come out and actually either start using real sugar or a way to where you're not hurting people. And so if they really start to push hard on that, we potentially could see a major sell-off, even 100 points from them.
So, that would be good. Bring that price down, buy low, sell high.
Yeah, and well, I'm just thinking more or less.
Now, Pedro, is this the price of Coke on the streets of Miami or streets of New York? Oh, Coca-Cola.
Yes.
It's Joe. Yes, if you can see the great graphic machine here, I have up the square flounders.
Yeah. Funny. On the streets of Miami or on the shelves? That was actually really funny.
Well, Tom, Coke machines in Miami are selling Cokes for $1.50. With credit card, it's $2.50. In New York, it's $3.50. No. Square Cokes. Come in on submarine.
They come in little baggies. My bad. Let's keep moving. All right. So MicroStrategies here. It's interesting since he's come in and talked about his strategy much more. We've actually seen some interest in MicroStrategies right here, and so it's going to be really interesting to see if they can really kind of push out of the 8 and 20 cross here and go up. We'll find out what's up, but they are finding some support on that 8. So we'll see what's up. It was actually really cool to see what he actually did as a company to kind of secure himself. And he goes, dude, he's like, I hope you sell my stock off. I'll buy it back. Like, you don't understand. Yeah, I'll buy it cheap and then sell it higher, offer more. Like, it doesn't matter because I'm going to buy more Bitcoin. And I was like, okay, I get it now. I get it. And he gives warrants. So he's able, as it sells off low, he says, hey, look, we're backed by Bitcoin. It's really what we are. So we're more of a Bitcoin trust. And it's not that we're a Bitcoin trust.
Treasury.
And thank you. And so that in itself is one of those things that it's like, are you, like it's like buying Bitcoin. And so I sat there and I started really thinking about it going, he's on it. Like he's actually, that could work. that very much could work. The only issue is it's all predicated on, will Bitcoin keep going up? I think it will. I think we'll see a Bitcoin one day at 3 million in the next 15 years.
Well, one of the things that I worry about its go up all the time strategy is people talk about how, well, if governments are buying it, all these people are buying it, and a lot of governments have bought it, a lot of people have bought it, countries have invested it. These people have bought tons, those people have bought billions and billions and billions and billions and billions of dollars, and it really hasn't gone up much. And one of the reasons why is they are buy and holders. If everyone just buys and holds, you've seen this in crypto, in tokens all the time, buy and hold. Well, eventually there's nothing going on, there's no trading. And then very small amounts of people can influence the market and keep the price down. Like if the big guys are just going to hold and not sell, they'll say, we'll check in 30 years on the price. Yeah. Then in the meantime, if there's only 1 million Bitcoin circulating, or in tradable, in liquid tradable accounts, someone like Binance can say, all right, we're going to tank this thing by 50% and not worry about sellers coming into the market to pile on or buyers coming in the market to get cheap. They can just keep the price down indefinitely. So I was actually, the other day, Pedro, BlackRock sold $500 million worth of Bitcoin. And people were like, oh my God, they're selling, blah, blah, blah. And I saw that as a good sign. I saw it as a good sign because they're not just buying and holding for the ETFs and all that. They're looking at this from a trading perspective. And that's the same thing Howard Lutnick said when he was the chairman of Cantor Fitzgerald. He's like, I love Bitcoin. And the people are like, wow, the old Elizabeth Warren stuff, wow, it's a scam and this and that kind of stuff. He said, it doesn't matter what's behind it and all that. It's the newest, greatest trading instrument out there. And we haven't had new, simple things to trade. We've had new complex derivatives. We've had this. Wall Street's coming up with all kinds of things to trade all the time to be the next big thing, and they're complicated because they're not. It's, the simplest things to trade are commodities. And Bitcoin filled that role of doing that. And so when BlackRock sold, I saw that and I said, that's good. I said, good. Throw some coins back in the market. They're going to buy again soon. They've sold that day. I bet you they bought earlier in the day, or another part of BlackRock bought other stuff, other Bitcoin on another account. Good. We need people to be buying and selling, just like the NASDAQ. The NASDAQ, nobody's buying and holding the E-minis and all this type of stuff. Well, I'll just hold this for a couple of years, They're trading it, and that entire volume is trading, and it's a good thing. It's a nice, healthy market, and if everyone just buys and holds Bitcoin, very few people have big influence, and I think that'll keep the price from going up. People, oh my gosh, there's only 50,000 left. Yeah, but there's only 6 guys trading it, and one guy can say, well, I want to double my money, so I'm going to crash it, buy it cheap. So I'm not that skilled on it, but that's how my mind sees it. So that's what I worry about. All this buy and hold stuff. No, trade it. Trade the goddamn thing. Gosh darn thing. Trade the gosh darn thing.
I agree with that. There's a lot here that I think if we can I'm trying to see how I can put this. So the fact is that BlackRock sold. BlackRock sells, makes it very public. Like if you think about that, like if they're trying to do the opposite, they don't like talking about, what they do. But if they do Michael Cohen got in trouble. Again, this is going to be a little bit different, but I'll get back to what we were just saying. Michael Cohen, who was a major trader in the early 2000s through like 2008 or 10, 11, and then he got in trouble and he got his hand slapped. This man was so powerful that he could literally make sure that the press only use one picture of him. And it was 20 years ago. Prior to that. Okay. Like that's, like if you use anything else, he's gonna come after you. That's how powerful it was. Like, these guys tell you what you're going to post, how you're going to say it, and that's it. Like this is how it is. If you're going to post this about us, this is what you're going to say. So they have the power. So when BlackRock allows media platforms to say that they sold, it is a way for them to make money. And it's kind of crazy.
Well, I have an article. It's not up, but it's talking about how the wallet that they watched tracked it. So they immediately had alerts within 8 seconds that BlackRock was selling Bitcoin. So I don't think BlackRock can dictate those terms when they sell out of a Bitcoin wallet that everyone knows.
I don't know. I don't think so. I think they very much can. I think they're that powerful.
I would disagree with you. They may have $10 trillion in cash, but I would say there's 100,000 people watching that wallet, and so there's no way they could silence everybody. Just can't. Impossible. Theory of large numbers says can't happen. They may be able to. A couple of the big outlets say, "Well, Larry's not going to come on your network if you report that." But if you just Google it, there's a bazillion results. I have a hair in my eye that I just cannot get out.
That's awesome. Sorry, I'm like doing my squats here. Not squats, but like it's funny. I literally squat for almost 2 hours.
Are you in the bathroom again?
No. Definitely. I literally sit.
He's leaning forward like this.
I got it. Yeah. There you go.
You got that hunch that.
No. I like I told you about the sciatic and the back pain, and since I started doing the squats, it was kind of painful for a few months, but everything's kind of my alignment, my back. God, thank God, man, I found that video on squatting for my lower back. It's crazy how well it's done. So I've gotten to the point where I can squat for a few hours and it just aligns my back correctly, allows my hips, allows all that stuff to kind of chill out. And, obviously I don't sit here for hours and hours on end, but man, it's good. All right, so let's jump back here again.
All right, before we do that quickly, Pedro, welcome to everyone watching us on LinkedIn. Thanks for joining us. Really appreciate it. We haven't been broadcasting on LinkedIn a lot. LinkedIn requires quite the amount of effort to remain with the algorithm to keep you engaged with the people that subscribe to you and say, click notify me of when Tom and Pedro go live. Even unless you post a lot, they don't even notify those people, even though they say to do that. So LinkedIn has been difficult for us for a while. It was killing it. But anyway, we're giving it a shot today. So if you're watching us on LinkedIn, drop us a comment, drop us a like, share it with your friends, tag people in the comments, and I'll respond, and it'll help with us getting the message out in LinkedIn. And I like LinkedIn because it brings in a little different crowd every now and then, some more serious people, kind of like the StableCon 2025 people that you were just participating with, Pedro, and try to get the word around, and hopefully someone watches it and says, I want to sponsor their show. I want to give my money, just like Chuck Jansen did, and give his $5 from his pocket to yours and mine. I want somebody like Ondo or CDW or BlackRock themselves to say, let's drop a ton of money on those guys. That was the nice way of pleading and groveling. Thank you very much. Oh, hell.
Let's go ahead here real quick while we're here. And I'm going to point this out here. Let's check out Ethereum here. So Ethereum here hit that 200-period moving average. I thought we were going to go up. We'll find out right here. But I do think we should get up to the highs here of that 27.62 to that 29.8. This area up in this level here is a pretty good area that it should at least come and tap. So I'm definitely looking to kind of play long here.
Ethereum not trading in concert with Bitcoin, which is nice.
Yeah. Yes. So that's why I'm more apt to just think, you know what, this thing, we could see this thing pick up and get going. The only thing that I'm a little hesitant on is the fact that we don't have a big enough, demand wick on the daily. But on the weekly, we've got a fairly good size here, so it's really good. I'm curious about, all right, Mike's over on Rumble says, I'm curious about XRP, like the lawsuit. is that all over? And what are the banks going to do? So do you want to handle that, Tom?
I'll start it off by saying XRP is pretty much in the clear now from the SEC and all that type of stuff. The SEC is not going to be actively investigating them anymore. There may be some leftover crap regarding when they sold the original tokens directly to investment firms because that was ruled in the courts to be a security. I don't know if they've cleared up that or they have to pay a fine or something like that. But the general prosecution of them is over, and you can see, I mean, literally, Brad Garlinghouse is now has been to sit with the president to talk about things, and they have a new Paul Atkins, the chairman of the SEC, has essentially said regulation by enforcement is over, is done, and Commissioner Hester Pierce, who is handling the crypto and digital asset subcommittee, or whatever you call it, for the SEC, has also said the same thing. That's done. We're going to set some clear rules and move on and stop picking on companies. And that's why you saw, that's why you saw the 5 and 6x from XRP at the end of last year, because that when Mr. Trump won, the signal went in that this is done, and it popped. The problem with XRP and Ripple itself is that they don't make any money, and they have a massive overhead. They have employees out the wazoo, and not cheap ones, and that's why the price of XRP from the last bull run to now stayed at like between 30 and 80 cents, but hovered around 50 cents, because they get tokens from their foundation and they sell it to pay for their operations. Now, Ripple is making money from their DEX, the ledger, and they're adding people into using the ledger. Like the UAE just announced that they're changing over how they manage their land deeds and titles and all that type of stuff. Going to be using Ledger for that, which is all. Everyone's like, yes, great, but it doesn't make much money. I mean, it does. I mean, it makes them money. It'll probably make them, the whole UA thing will probably make them a couple $1 million in a year. They need to make $1 billion from each of these clients, though, because they have. And so, for the time being, until they can. Basically, you need Ripple to go public so you can analyze their balance sheets and their books and profit and loss until they start making cash monies. And it's the same with any company. Until the analysts can say, okay, all that gobbledygook financial stuff is great. How much money did somebody pay you this month? Like actual cash, from operations. You sold your product. And for Ripple, selling product is transactions on Ledger. And consulting for their CBDC programs around the world. And they do a lot of that consulting basically for free on the hopes that they get to run the CBDC program for the government, get paid from that. So they're cash poor all the time, and they have to sell XRP to do it. So I'm always down on it. And I was down on it before they 5x'd, and then Ripple showed me the door, and the price 5x, and I had to eat crow on that. But their situation is still the same. The legal stuff seems to be over, but the cash flow is still not there. And if you're, just a simple analyst, you look at cash flow. How much cash do they generate from operations? And I realize tech companies like to say, yeah, but we got all this investment, we got people, we got bros giving us the Silicon Valley money and that type of stuff, and we got, our capex is this, our run rate is this, and our burn factor is that. You want to ask, how much money did you make selling your product, and does it cover your expenses? For XRP, the answer is still no. And so you got to watch out for them. And then now I'll take devil's advocate to what Tom said. XRP community has a lot of money and a lot of invested in that, and that's different than in a traditional finance world. Traditional finance world, companies don't have an army. Maybe Tesla had an army or something like that. And so the community affects the fundamentals of a company a lot.
Well, let's make sure we understand. We even clarify on that army idea. They have people who will buy the stock, or not the stock, but the coin. They have people, if it goes low, they will buy. Purely, not even from a fundamental level, but purely because they have a investor or a core investors who just buy the coin. So that's why it's a little bit different. And that's what we call the army, right? Because if you watch them, if you go into their whole entire group, they'll be like, all right, you know, XRP selling when it was really down at the lows at 30 cents. I mean, you literally, they were all saying buy at this point. It was like, it was banks that meet Roaring Kitty. If you guys remember Roaring Kitty, who helped with
AMC and GameStop.
yeah, AMC and GameStop, right? It's just that, and you had college kids that are coming in. Now for XRP, there's a lot of boomers and Generation X that actually own XRP. So it's, you know, the younger crowd don't necessarily into it, but again, they're part of that army, and it's kind of fanatical. I mean,
it is kind of fanatical. The XRP army is, and they will buy it when they'll DCA, they'll do all this kind of stuff. But ultimately, you know, as companies mature, they fall into the regular type of corporate activity. Are they making money from operations?
Yeah.
And you have to be careful of that. One question Mikester has is Stellar, Stellar tied to XRP only by industry similarness, and XRP Ripple is the big kahuna in that niche, and Stellar is the small kahuna in that niche. And so if there's good news for XRP, there's good news for Stellar, and they trade accordingly. And I think there is a market that arbitrages the two, so they kind of stay within a range, but it does vary here and there based on news. But generally, they kind of trade in concert. Let's look at the Stellar price also.
Streetcar named Desire there.
Yeah, Stellar. Well, they're sitting at a $9 billion market cap for Stellar. That's good. Is that the chart you have up now?
Yeah, yep. It's Stellar. Yeah.
So they're, you know, if you want to look at just from a rookie chart there, it looks like one giant bull flag forming. Actually, it broke out a little here a couple of days ago, about 2 months ago it broke out. Right, yeah.
I believe this is May. When was the announcement? It was right here. This was the announcement of the crypto reserve, as well as the Bitcoin reserve. So that was these days. We came back into this area. We sold off on the 200 period moving average, came back down. I want to say I was bullish with this as it was moving up. I thought we would sell off, or I thought we would actually push through this area. It looks like we did. We hit that 200, and we're coming down here. It is showing kind of some weakness here. You can see here as we're selling off right up in these levels. You can see how we saw an increase of sellers here. But again, it's more topping off or taking profit. But if it comes down to this level here, or even potentially to that 21 cent area, you've got a good amount of people who can potentially buy in. You've got a zone right here. Give me 1 second. Change the color. So this area, you've got a zone upon a zone here, and it's a reactive zone, so it means that this is a reaction of this react, right? Like we came down, this is a rally-based rally, we came down, hit this area, and then we created a zone. So it's a zone on top of a zone. This zone here could potentially hold. If this does not hold, and this most likely won't hold, we should be coming down to this level here, which is going to be that 14 cents. Again, these are numbers here that I look. Okay, so I typically preach a couple things. One, I believe in dollar cost averaging. So you should be putting in money into something that you put in weekly. Whether that's $10, $20, $50, $100, it doesn't really matter. As long as right now, like you're putting in as a dollar cost averaging, you should be doing that, right, within crypto. But on the back end, what's also important is that you put money, you kind of set money aside in case we have a major sell-off within crypto that you can buy in. Right. So that's what I always try to preach. Right. So if the market does sell off and we get down to that 14 cent area, right, and we're sitting at that 30, well, you just got a 50% discount on that, which means that you just bought twice the amount of XRP. So that's all I always say. We know that crypto is extremely volatile. I mean, you can literally see a 30% drop within 2-3 days. And that right there is bear market territory for traditional finance. And then the next week, it cleared that, 30%, and it's now up another 20%. So, especially with a lot of the altcoins. So that's why I always try to give you guys a good strategy on how to do that. I tell you what I'm doing and how I'm going about doing this. But again, this is not financial advice. This is just simply my humble opinion, and purely educational and entertainment purposes only. Or as Tom says, edutainment.
That's what you get here, ladies and gentlemen, on the DYOR Media Network. Edutainment. Get edumacated. Learn all about strategeries.
So one of the things, you guys, I keep an eye on is we're starting to see another sell-off on H&T. I was kind of shocked that this didn't continue up, but we are seeing it. So the next leg down on H&T, honestly, is coming back down to the 150 area, the $1.51 area. So if it comes back down there, I'm looking to buy it. Also, the new phone that just came out with the Solana phone, I think there's 150,000, and they're already back ordered.
That's crazy how you turn a little crypto project into this massive thing like that. I mean, they were never really little. They started kind of big, but still, just 150,000. You're gonna have 150,000 people walking around with your phone.
I would. I honestly, I'm mad that there's back order. Like, I wanted to buy one. Like, I legitimately wanted to buy one, and they weren't even that expensive. They're like $1,500, so they weren't even that expensive. You know what I'm saying? That was the part that I was like, dude, like, so, and it pays you. It literally mines things. There's a miner. You can mine H&T. You can mine a bunch of other coins in there that are on the Solana network. So it's like, it just makes sense from it, and it's an actual phone, so you can use it as a phone. You can use it other things. But I mean, I look at it like, it's just a good deal, smart way to mine coins, and for $1,500, and you can basically finance it over a period of a year, over 2 years, and so it makes sense. I think this will be a big deal. I'm shocked that a lot of the other phones haven't incorporated this type of movement right in their own phones. Like Android or a few of the other ones out there. I'm just shocked that they haven't. So, anyways, the other thing I want to bring up, and I thought was really interesting, and I think I sent it to you. Facebook acquired a nuclear plant for AI energy. Did you see that?
I did not see that, but that is not surprising. Let me find that article here.
Yeah, find it. I was absolutely taken aback, because the idea of when we've been talking about there needs to be some real infrastructure projects to really get the energy usage, because we are a day late and $1 short. We need more efficiency on energy production, and we need more facilities that create it. So the ones that are currently working, we need to really kind of build that back up, and then the ones that we are looking to be building, we need to quickly do that. You want to read the article, my friend?
Yeah, Meta's nuclear deal signals AI growing energy needs. One hacker way is their Facebook thing. Oh, from Constellation Energy. That's the Baltimore, Maryland provider. Well, I don't know why they said that. When they revive an Illinois nuclear power plant, that was one way of signaling that the parent company of Facebook and Instagram is preparing for the future built with AI. Meta's 20-year deal with Constellation Energy follows similar moves to meet tech industry's insatiable demand for new sources of electricity. AI uses vast amounts of energy, much of which comes from burning fossil fuels, which causes climate change, blah, blah, blah. Let's see. Is the U.S. ready for nuclear-powered AI? France has touted its ample nuclear power to relocate Well, this is an interesting stat. France produces 75% of its energy versus nuclear, and right next door, Germany, it's zero.
Don't they have? But wasn't that because of the? Well, it's because of World War II.
Well, they had a big green movement in Germany, and they still do. When you go over to Germany, there's roofs all over the place that have solar panels. They went all in on solar, burning wood and trash. They burn all their trash, incinerate it, and they burn so much of it they have to buy trash from the United States and other places, and they've set up a scam that you can't believe in Germany. They're green. They don't release any carbon dioxide because they claim that the carbon is released where they buy the trash and where they buy the trees to burn and the wood pellets, which is all in South Carolina. You look at South Carolina's greenness, it's all mostly agriculture and then the big tech, or not tech, but industry corridor along the highway. And they have massive amounts of CO2 production, but it's all burned in Germany. It's scam. Anyway, that's not the point. That was a striking soliloquy there. The need for nuclear power is, Pedro, it's driving that whole industry, and the nuclear powered associations went from dead to very busy. They're coming up with new machines that are, the size of a car, a Volkswagen, that can last 20 years.
One's literally the size of a small,
yeah,
like those tiny houses.
And not only one, they're not ones that will melt down or explode or anything like that, because they don't even need cooling. They don't get hot enough for it. And not only that, the fuel in it is not even something someone could steal and make into a thing that goes boom. In theory, they could steal it and chop it into a million pieces and spread radiation and stuff like that. But I guess that's a problem. Another different problem to solve. You just bury the damn thing. It's a big deal. And this AI is going to draw all that stuff. The amount of money they're spending and investing in AI is going to start. It's got to start hurting the books of these companies. They've spent a lot of money on it, and currently they get really no return on it at all. They get money from other companies investing them, but once again, the accountant part of my brain says, how much cash did you generate from operations? All these AI companies are generating cash just from investments. Other companies, and they're banking on the future. The question is, how are they going to monetize? How are they going to get everyone in the world to pay for all these power plants that they need to build?
And let us not forget that, a lot of the money is made through advertising, right? So they sell your data to people. And speaking of that, which I thought was really interesting, is that I forget what pub they went public, but it's for whatever reason, I can't remember what they're called. I sent you part of this, but in Brazil, this was over the weekend, Brazil, they have companies out there that literally, they're gonna invest in Coke.
Of course.
Oh, that's awesome. PF, of course. Absolutely. That's funny. But on the back end, we're watching now companies in other countries really saying, these big tech companies, you can't just keep selling our data without giving us money for it. And so they're giving rights over your data, saying you can make money on your own data, these large corporates. And sooner or later, that's going to bleed over to the United States. Many large, when you talk about X or you talk about Facebook, in a lot of these countries, they're like, our people need a way to bring money in. And if you want to mine off of them, you need to pay them some of that money. And,
absolutely. Europe's going to beat us to that punch. They're already in the privacy. I can't remember who it is, but a large company just pulled out of Europe and the UK because of data protection. They're like, we just can't make any money because we can't take everyone's personal information and sell it to other people.
Yeah.
And we need that. And if more countries do that, you think, well, these companies need to make money. Yeah, they can pay us for the data, and we can choose whether to sell it to them or not.
Yeah.
I take a number of surveys online for those, $5 and $25, gift cards and stuff like that. You know, I'll give you a $20 Amazon gift card. Yeah, I'll fill out that. Boop, 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 boop. No
Sometimes
problem.
it take like an hour though. That's the thing. I'm like,
Yeah, those I just give up. I'm like, no. But my time is worth more than $25 an hour.
yeah. I'm the same way. That's why there was one time I sat there, and I was like, no, I'm good. But even then, like, I think it's going to come to a point where, like, Americans be like, the rest of the world has this. Why aren't we doing this? You know, and whether it's $25 a day. In Brazil was I think it was like $50 a day that they were getting on average back, and I was like, wow, like that's a good amount. You know, like if you think about it, like you're online, you're doing, and you're making $50 a day. It's not bad at all. So, I don't know. I just think that's good.
Yeah, Draco or Jesus. I do remember the old data stealers at malls where you sign the card and all that type of stuff. I remember when I was younger, I drove my dad crazy once because I went through 2 magazines, boating magazine and ski magazines, 2 things that we did as a young family. We had a boat and we went skiing, and I took the cards out in the middle of them and wrote our information on it. And checked like all the boxes saying, I want to learn about this, all these brands and all this type of stuff. Within 2 months, and this is by mail, I actually mailed it back to the company. I was, 10 or 11. Within 2 months, our mailbox every day had this much crap in it. People calling my parents, well, so you want to invest in the boating industry? Well, we're setting up a new company to build catamarans. My dad's like, yeah, I work at a paper plant, And they're like, why are we getting all these things? And I'm like, isn't it cool, Dad? Look, I get all this free stuff and I get all the magazines. And my dad's like this. Yeah. What information did you write down on that?
That's funny.
And now we get that in our inbox, in the spam, and you just ignore it. But when it comes in your mailbox and you run out there, you see the mailman and he's like putting shit in like this. Like you come out and you get all these, man, we got all the brochures for all the expensive boats. Like these things, in the late 70s and early 80s were, $80,000 boats. That means they're $1 million boats now. My dad's like,
That's funny. It'd be like, what is that? So that'd be, let's say 100,000. That'd be 200,000. Be 400, about 800. Yeah, probably around 800,000, 400 to $800,000 for boats now.
Anyway, I don't know if you can hear it, Pedro, but the music is playing.
Appreciate every one of you guys. You guys rock the mic, and thank you so much. How did we do overall, you think? I mean, can you see where we're sitting right now? Just give everybody an update, or it's not populated for you.
Let's see. Let's just, I can kind of tell on Rumble generally how it's done. We had 138 views of our stream on Rumble. Thank you very much. I really appreciate everybody. And that includes everyone that just scrolled through and got it for a second or two, but it also includes 65 of you that tuned in for a long time. So we appreciate that. YouTube, not so much. LinkedIn, I won't be able to tell for LinkedIn for a while, but at one point we had at least 3 people watching over there.
Nice.
So that was good. But anyway, it is Wednesday. The 4th will be here Thursday, the 5th for a show tomorrow. If you got any questions, let us know. If you got anything you want us to cover, send us a comment. Join our Telegram. The link is in below here somewhere. Not on LinkedIn. You got to click to our account, click to our website, and then click to LinkedIn, or click to Telegram. So come and join us. Discuss the day's topics. I'm trying to post the day's topics in our Telegram room, so you can also read the articles. I'm trying to summarize this a little bit, so in a shorter video form. But anyway, as I always say, the man in the box next to me is Pedro Garcia, the crypto chart analyst. My name is Tom, otherwise known as Striking, here in the digital media universe. I'm glad to have hosted another great episode of this great show, and we will see you tomorrow.